Hey, have you ever wondered how day trading actually works in real life? Not the fake stuff you see on Instagram. I'm talking about the real process. How do traders actually buy and sell within minutes or hours and make a profit? Today, I'm going to show you exactly how day trading works in practice, with real examples using Apple, Tesla, and the S&P 500 futures. Let's get into it. If you're new here, welcome. Every day, I level up thousands of traders through high-quality education so you can master the markets. Okay, so here's the deal. Day trading is simple in concept, but very hard in execution. The basic idea is this. You open a position, meaning you either buy, going long, or sell, going short. And then you close that position on the same day, before the market closes. Your goal? To capture small price movements and turn those into profits. Now I want to give you 3 examples of how this can work in practice, and we'll use different assets to illustrate the point. First example will be Apple stock. The second one will be Tesla, but this time we'll sell short. And the third example will be the S&P 500 futures. So you can really see how this applies across various instruments. Part 1. How it works? Let's start with some context. It's 9:30 a.m. The New York Stock Exchange just opened. You're watching Apple, ticker symbol Apple. The stock is priced at $180 per share. Now your analysis tells you it's likely to go up. So you decide to buy 100 shares at $180. Around 11 a.m., the price goes up to $181. You sell. You just made $1 per share. That's $100 profit in about an hour and a half. Okay, cool. But what if the price drops? Let's say Apple falls to $179. If you close it there, that's a $100 loss. That's day trading. You are reacting to real-time price movements. No holding positions overnight. No waiting for yearly price swings. Just buying low and selling high within the same day. What about if you think the price is going down? That's where short selling comes in. Let's take another example with Tesla. It's 10 a.m. Tesla, ticker symbol Tesla, is trading at $250 per share. You believe it's overbought and due for a pullback. So you decide to sell short 50 shares at $250. About an hour later, Tesla drops to $245. You buy back the shares to close the position. Your profit is $5 per share. That's $250. And by the way, if Tesla went up instead of down, yeah, you'd lose money. Same concept, just in reverse. You are betting against the stock in hopes of making a profit from the downside. What about something like the S&P 500? Is it possible to make money from a day trade there too? Absolutely. In fact, many professional traders make their living trading futures like the S&P 500 E-mini, ticker symbol ES. In futures, every point is worth $50. So a 10-point move is $500. A 25-point move is $1,250. The further the price moves in your favor, the more you make. But this is a double-edged sword because futures are leveraged. The gains are bigger, but so are the losses if it goes against you. So yes, you can make money quickly, but you also need to be prepared for quick losses. But wait, you might be thinking, how do traders know when to buy or sell? Like, how do they know when the price is going to go up or down? Good question. There are several ways traders make these decisions. They use technical analysis like support and resistance levels or indicators such as VWAP, moving averages, RSI, or just read the price action like candles, patterns, market behavior, etc. The key is having a plan, a strategy, and executing it with discipline. It's not about guessing. Now look, it's important to understand that trading, especially day trading, is not a get-rich-quick scheme. It's not about trying to hit home runs with every trade. It's about consistent small wins. Now, of course, sometimes you swing for the fences and crush it. But overall, your goal should be to make a little bit of money on most of your trades and to have a few big winners to really make your month. Here's the thing, even with the best analysis in the world, there's still risk with every single trade. The price can move against you. Slippage can happen. Sometimes you lose. That's part of the game. The key is managing that risk, knowing how much you're willing to lose on each trade and when to walk away. It's not about being right all the time. It's about being smart and protecting your capital. I mean, think about it. Would you rather drive a car without brakes just hoping you never crash? Or would you rather take the time to learn how to drive safely? Because that's what trading is about. It's not just about clicking buttons and hoping for the best. It's about skill, knowledge, and most importantly, discipline. In day trading, the clock is always ticking. You need to be ready to react quickly to changing market conditions. You have to stay focused and not let emotions cloud your judgment. It's a mental game as much as it is a financial one. So yeah, day trading isn't for everyone. It takes a special kind of person to be able to handle the pressure and make the right decisions in real time. Alright, so let's recap. Day trading is pretty simple. You buy or sell an asset, try to capture small price movements, close everything before the market closes. It can be done on stocks like Apple and Tesla or on futures like the S&P 500. Simple in theory, but challenging in the real world. That's why learning, practicing, and managing your risk is everything. If this helped you understand how day trading actually works, leave a like, drop your questions in the comments, and subscribe for more content like this. I post new videos every single day demystifying the markets. If you want to go deeper, check out the links in the description below. One last thing. If you're looking for a place where you can ask questions about trading and get answers from experienced traders, join my community. Thousands of traders just like you are already there having meaningful conversations and helping each other grow. It's awesome. Thanks for watching. Trade safe, and I'll see you in the next video.